welcome you into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and try to take as many queries as possible. But before that, let's have a look at what the markets are up to. So Cheryl, not much action on the benchmark indices, but a lot of stock-specific action today.
Absolutely. A very good morning to you, Shrishti, and it's good to be back after a long weekend, actually, to say. But if you look at the benchmark indices, they're doing absolutely nothing. Looks like they are just taking forward last week's market action as well today. If you look at the Nifty, it's holding over 19,800 levels. If you look at Nifty Bank, it's trading flat, just in line with what the benchmark indices are doing at this point in time. A lot of gainers on the Nifty, and it has to be the Adani Group counters that are soaring high in trade today. Remember, the Supreme Court has reserved the order and has concluded the hearing in the case, but you're awaiting the order for it. But if you look at the Adani Group counters, all of them are soaring in trade, be it Adani Enterprises, Ports, Total Gas, Energy, ACC Ambuja, or even for the matter of fact NDTV, all of them are seeing sharp gains in today's trading session. But apart from the Adani Group of counters, what's buzzing is Tata Motors on the Nifty. Along with that, you have BPCL, Hindalco, Ultratech are the other set of gainers in trade today. But talking about the losing end of the markets, you have SBI Life that's taking it easy today. Apollo Hospitals is the other counter that is in the negative territory. Reliance Industries 0.6% downtick coming in for that particular counter as well. But the advance decline ratio for now is tilted to the favor of the advances. Talking about the sectoral indices, then what's the color there? If you look at oil and gas sector, that's among the top gainers, the BSE oil and gas sector. You have metal that's holding on to strong gains in today's trading session. Let's take a look at what the broader markets are doing. Your mid-cap index as well as your small-cap index and how are they trading in trade today. If you look at it, outperformance once again coming in from the broader markets when you compare them to the benchmark indices. But on the negative side is the IT index that's taking it easy. You have FMCG as well as pharma. So suffice to say that defensives are on the back foot in today's trading session. But there is one particular sector that has been in news of late, and that has to be the auto sector, apart from banks actually. Shrishti, a lot has been happening when it comes to the auto sector front. You are waiting for the auto sales data for the festive season also to come about. For two-wheelers, it's been really good. You have the FARA, they are also come out and talk about the festive season, saying the rural area actually kind of drove the two-wheeler sales. But on the whole, what should one expect when it comes to the auto sector?
So auto sector, like you clearly mentioned, Cheryl, that the two-wheelers are taking it much ahead in terms of the sales data, as well as you can definitely see that in the stock price action, because in the 42 days festive sales period that has been the sales data being released by FADA, it clearly shows that on a YOY basis there has been a 21% jump on the two-wheeler sales. So the two-wheeler category is definitely leading the charts, because 10% growth is what we have registered in the passenger vehicle segment. So almost double the growth is what we have seen in the two-wheeler category, though three-wheelers have also done well for themselves, almost a 41% growth in this particular segment. But this segment has been doing well. And when we talk about the tractor sales, then that was quite muted, though they are definitely pointing out that the rural sales has definitely given a lot of push. And all these two-wheeler new launches that has happened from the likes of TVS Motors, Bajaj Auto, even as Hero MotoCorp, they have definitely done quite well in terms of the booking and the sales data. So this is on the festive sales period. The dealers were also highlighting that this time the two-wheelers are definitely going and taking the lead. But key to note is the number of new launches that has already taken place and that are still taking place and going to take place in the times ahead as well. Because in the latest, Royal Enfield new Himalayan 450 has been launched at a price of 2.7 lakhs. That's quite a competitive pricing, because the rivals are KTM 390, and in the times ahead, Hero X Plus 400 is also expected to launch. And Nomura has also come out with quite a positive note, where they say that the new Himalayan seen as a significant upgrade. The reviews of the Himalayan bike are strong, and the Himalayan bike has 25% higher pricing, but they are expecting that the sales will take a push and the Himalayan sales to improve to 4,000 units per month versus 3,000 units per month. And even with the new launch, even the pricing is set higher. The kind of upgradation these new bikes are seeing, the brokerages are of the view that the demand will still persist and even push further, and that's why Nomura has retained their neutral rating, though their target price is 3,640 rupees. But that's all about the current launch. But in the times ahead, it's going to be even more interesting times for the two-wheeler counter, because a slew of launches are lined up from the types of KTM, Yamaha. They are coming up with 2 to 3 launches in the month of December itself, and the key to note will be Bajaj Pulsar 400 launch that's expected in the month of December itself, in a price bracket of 2 to 2.1 lakh, and all eyes will be on this particular launch. The stock is also quite excited, but going ahead in 2024, be ready for more of the launches from the likes of Royal Enfield. 3 particular launches that we wish to highlight is Shotgun 650, Roadster 450, Classic 350, Bobber, as well as from the Hero MotoCorp space. The eyes will be on Hero XFR, XF3R, and the key to note, Cheryl, is all of these launches are above 1.5 lakhs. So that is why that the premium segment is definitely taking the lead, and the two-wheeler counters as well as the pricing that these companies are doing is quite great. The demand still persists, and also on the back of the kind of a demand that these passenger vehicles are doing, there are a lot of price hike that has been announced from the likes of Tata Motors, even Audi, Maruti. They have announced, and you can see that they are positive on the demand ahead as well.
Absolutely, demand is pretty positive. People are spoiled for choices because be whichever premium bikes that you would want, Harley, be it Triumph, it's all out there right now. So yes, definitely a lot to choose from, a lot to pick from, not only when it comes to the new launches, also when it comes to the entire auto pack, isn't it? We have our experts today. We have Kunal Bothra as well as Rajesh Agarwal joining us on the show. A very good morning to you, Kunal, as well as Rajesh. And like I said, we are spoiled for choice, be it the slew of product launches, be it on the two-wheeler side or the four-wheeler side, or for the matter of fact, the entire auto pack is buzzing. Not only two-wheelers, four-wheelers, or even CV makers. You also have the auto ang stocks that have been on fire. A wide basket, a huge basket to choose from. Rajesh, which side will you be on?
Good morning, Shail. Good morning, Srishti. Good morning, Kunal. You said it right. The consumer is spoiled for choices, and there are a number of new launches that has already been done in the recent past, and there are a lot in the pipeline too. Not only in the two-wheeler sector, but even in the four-wheeler sector. Even going a little backwards, if you see, every month we have been seeing very exciting data coming in from auto side. And not only two-wheelers, four-wheelers, everything is on the uptick. Month on month, we have seen them. And with the new price rises and the aggressive pricing these companies are doing, for example, RE, Royal Enfield, priced aggressively of its Himalayan 450, and that's the way the things are going in. I think it's a quite exciting time going ahead, not only for the automobile sector as a whole, but auto ancillaries, as you said. There are very exciting picks at this point of time also, because even after the kind of run-up they have witnessed, I think somebody holding for a period of 12 to 18 months can expect good gains, not only in Bajaj Auto, but also Maruti. These two would be our picks from two-wheelers and four-wheelers. And as far as auto ancillary pack is concerned, I think LG Balkrishnan, Gabriel India, Minda, these are some of the names which one should keep a track of.
Okay, so that's the fundamental take coming in on the auto side and the stocks in focus. But Kunal, talking about the technical parlance, because all these counters are definitely showing great moves from the two-wheeler pack. Bajaj Auto, TVS Motors already sitting at an all-time high. Even Hero MotoCorp hit a 52-week high for itself today. And what's from the passenger vehicle as well as two-wheeler space that you like at this point in time?
So good morning, everyone. Yeah, I think from the auto pack, it's now become a lot more better options, because earlier you just had M&M and Tata Motors which were doing pretty well. Now on the two-wheeler pack, I think Hero MotoCorp has completed a very strong sort of a breakout for itself. Looks attractive even at current levels. Bajaj Auto is something which also has done reasonably well. It's been a more consistent chart from the time the stock had broken past about the 4,000 levels and now climbed much above the 5,000 mark for itself. Amongst the fresh candidates for breakout, I also believe that Maruti is the stock to watch out for from current levels. The stock has confirmed a breakout above the 10,000 levels sometime back, and it's still holding up pretty well for itself. So that also looks attractive. So many options to choose from, not restricting towards the likes of Tata Motors and M&M, but Hero MotoCorp is something which looks attractive, as well as Maruti from the four-wheeler pack.
All right, so those are the picks coming in from Kunal. But Kunal, last time then when we chatted, you did tell us that you have the Hero Harley bike that is on your radar. Have you added that to your portfolio already?
Not really, but I think now I'm looking at the options what Srishti was mentioning about RE.
There are way too many options, so
Exactly.
you're going to wait it out, is it, till March at least to
Absolutely.
go and...
It's worth the wait.
It's
It looks
worth the
like.
wait. What about you, Rajesh? Have you tried and added anything in your portfolio when it comes to physical asset and when it comes to a car?
See, I already have a RE350 with me, and as far as car goes, I have a Hyundai Creta with me.
All right, Kunal. He's already gone ahead and punched that buy for RE already.
No problem. I'm very happy and very glad. In fact, in my next visit, hopefully, I'll probably get a ride.
Oh, definitely, at least if not for Kunal, I'm sure we will both try and make it to Kolkata soon, Rajesh, and we will definitely go for a spin on your in your vehicles, definitely. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. Be assured, we will be discussing this through the break. But for now, we'll take a breather. We'll be back with your queries on the other side. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get to answers for all of your stock related queries. Remember, viewers, you can connect to us on the WhatsApp number that'll be flashing on your screen. Do remember to mention your name each time you write to us. The stock that you're looking to invest in, mention that name as well. The buy price, the quantity if you've already purchased, as well as the time horizon that you're intending to hold a particular counter. Because in that way, we will be able to direct your query to the right set of experts. Today, we have Kunal Bothra on the technical, which will be primarily a short-term and medium-term queries will be taken to. And we have Rajesh Agarwal on the fundamentals, where we will talk about the long-term prospects of a particular counter. So let's kickstart the query segment. This one is coming in from Narveer. He is writing to us from Hyderabad. And Kunal, he has BPCL in his portfolio at a price of around 418 rupees per share, about 1,000 shares he has of BPCL, and he's been holding on to BPCL for the last 2 years. He wants to know what sort of a target should he keep in mind now for BPCL, as well as a stop loss for the same, given the fact that now BPCL has picked up steam. In fact, in today's trading session, all the OMCs are buzzing.
Well, yes, and in fact, the last 1 week also, I think these stocks have done reasonably well. BPCL, particularly from the last 3 to 4 weeks, has moved from 340 to 420, and that's quite a steep, sudden, swift rally for the stock. And these are the kind of stock rallies which generally leads into stocks going into a major breakout mode. So even if your purchase price is 500 plus levels, I think you should continue to hold on to the stock price. And my assumption is that if this trend continues for BPCL, say over the next 3 to 6 months, the stock could be coming very close to your cost price. So I would suggest a hold.
Okay, that's a hold on BPCL. But moving on, and Rajesh, the next query is from Ramesh from Delhi. He's holding 150 shares of Tata Consumers, and his buy price is 860 rupees. Wants a long-term target on this one.
One should continue to hold Tata Consumer. The company has good product profile. The entire TN Devashish Center, salts, etc. They have even announced merger of Tata Coffee with them. Long-term prospect looks very good. 1 year target should be 1150 in this counter. One should continue to hold and add on dips.
All right, this next one is coming in from Mahesh, who's a senior citizen, Kunal. He has 300 shares of VA Tech Wabag at a price of 330 rupees per share. He wants to know whether he should continue to stay put with this particular counter or look to exit.
Well, yeah, absolutely. You should continue to stay put. I would advise to stay put because the stock has just started to show signs of a major breakout. So I think it's almost at 600 plus levels. I do track it very closely. And my sense is that the stock is restarting a major uptrend for itself. It's still off or significantly off from its previous highs or major highs of 900. I think 900 approximately was the all-time high levels for Vatek Wabag. And I believe that in this course of the uptrend, hopefully the stock should be able to surpass those levels. The best part about the chart so far for Vatek Wabag is the momentum indicators on the monthly, quarterly charts, which are already at a major breakout levels, and that indicates that this could be a start of a major multi-month, multi-quarter uptrend. So I would suggest to stay put.
Okay, Kunal, one more query for you. This one is from Karan from Delhi, and he's holding Ratan India Enterprise for the past 2 years at a price of 45 rupees, and he's holding 1900 shares. He was about to sell that, but during Diwali, you recommended this particular counter. So, what are the short-term targets on this one, and what will be the recommendation? Should he continue to ride the rally in this one or book profits?
Well, yeah, I do remember I'd recommended the stock, for Ratan India, and I think the targets which I had given was closer to 88 rupees for the stock price. If I'm not wrong, it's currently at 78, 79 levels for itself. I would still believe that it's a very strong breakout for the stock price, and my strong sense is that the stock should surpass the target levels which I have mentioned. So if you've bought at lower levels, I would suggest to stay put. At least keep 88 as a moderate target range, or band where you can look to maybe book out partial profits over there.
All right, this one is coming in from S. Radhakrishnan. He's writing to us from Chennai, and he has FDC shares, or rather he wants to enter FDC actually, Rajesh, for the longer term. He wants to know whether it makes sense to look at this counter right now and in fact go ahead and put in money and bet on this one.
See, I think there are better choices in the pharma space. Although this is a very good company with strong product profile, strong balance sheet, doing well, but nothing is happening on the wholesale though. Unless until you are ready to hold for a period of 2-3 years, I don't think there is a better choice. There are better choices in the pharma sector where you can go ahead and buy likes of Cipla or a Dr. Reddy, which can give better returns in the longer term.
Okay, go for better choices in pharma. But Kunal, the next query is for you. This one is from Raja. He's holding RBL Bank for the past 3 months from a price of 250 rupees. What to do in this particular counter, and any medium-term targets on RBL Bank?
See, again, I'm very bullish on the stock price. Now, you have to understand that I think the last few weeks, there was a negative news flow which had happened for many of the banking names. And I think in that aspect, RBL Bank also went into a correction from 255, 57 when the news flow had come. The stock had come back towards 225, 230 odd mark. It's still trading into this band of 230 plus minus 57 rupees for RBL Bank. I would believe that it looks very attractive on the long-term prospects. But this short-term negative news flow could probably play have a negative effect on the stock, say for the next few weeks also. So if you are in from a very short-term view, then I don't see any major recovery on RBL Bank. But if you can hold on to the stock for say another 1 to 2 years, then I believe that the stock holds hopefully good prospects to give that breakout about 260 mark plus cross about even 350 to 400 plus levels.
All right, the next one is coming in from Ghosh Dada, writing to us from Delhi, and this one is for you specifically, Rajesh. He is very happy with all of the Adani shares that he's holding in his portfolio because all of them are seeing good and steady increase in trade today. He's in huge profit for all of them except for Adani Wilmar. Now, what he's asking is whether he should buy more of all the other shares, or what sort of strategy should it be? Should it be given the fact that Adani Wilmar has not been seeing that much of an up move as much as he expects?
See, as far as the entire Adani pack is concerned, I think valuations are attractive, but there are a lot of overhang of the regulatory issues and the kind of things we have seen in the recent past after the Edinburgh report and all. It's not prudent to put new money at this point of time, but whatever you are holding, you continue to hold. As far as Adani Wilmar is concerned, the numbers have been pretty bad, although the product profile like Fortune and all is very good. And there have been news off and on that they are going to exit this and going to sell to some other big names. But these are only speculative news as of now. Nothing should be taken as on the face value. So I think stay put with your holdings. Wait for some confirmation on the news and the regulatory issues. After that, you can consider buying. As far as your holding is concerned, continue to hold.
Okay, Kunal, the next query is from Ashok B from Chennai, and he's been holding one lot of Tata Chemicals from a price of 930 rupees for this November expiry. Given the move, do you believe that it will be wise to roll over this particular counter to the next expiry, and the outlook on this one?
See, I think if you bought at 930 levels, I would suggest to maybe keep that as a stop loss and hold on to the trade over here. Now, there are 2 points. One, of course, on the chart specifically for Tata Chemicals, there is nothing which is interesting in terms of a chart pattern. The stock has just been very sideways. In fact, it's also trading below the long-term averages. So my assumption is that maybe the trends for the stock could remain a bit more sideways. But the attractive bit over here is something which is happening outside the space outside the stock, and in the entire space, chemical stocks and specialty chemical stocks have started to show signs of a breakout. We've already seen the likes of SRF, Naveen Fluorine, etc., showing very good recovery for itself. So my assumption is that if the sector starts to look very attractive, you could probably expect Tata Chemicals to also get into a breakout. So if you can, then keep a trailing stop loss of 930 and then hold on to your positions as well as roll over to December series.
All right, this one is coming in from a viewer who's not mentioned his name. Actually, he's from Yuvraj from Chennai. Rajesh, he has Shobha Realty, Shobha Limited, that is, with a 25% profit in his portfolio. Now, he wants to know whether it makes sense to exit Shobha and instead put that money into Godrej properties, or if not, he wants to also know if it's the right time to enter HAL as well as BSE for the long term. Firstly, makes sense to shift that money or book out profits from Shobha and in fact put that money in Godrej properties in anticipation of making good profits going ahead. Also HL, BSE for the long term, right time?
See, first with Shobha and Godrej Properties, I don't think there is any point in switching from Shobha to Godrej Properties. Both are very good companies, no doubt in that. In the entire realty pack, I think there are few names which can be considered for long-term investment. Shobha and Godrej being one of them. But switching from one to another doesn't make any sense. If you have new money, you can go ahead with Godrej Properties. But at this point of time, I would say stay put with Shobha Developers and continue to hold. As far as another investment of HAL and BSE is concerned, I think BSE gives very good prospects going forward because of the fact that they have holdings in CDSL. They are the largest SME exchange, the largest mutual fund platform, star platform they are having. And not to forget the kind of volume increase in their F&O segment and with the kind of price hike they have done in the F&O side, the transaction cost and all. I think the EPS is going to be multiplied from here in the next 2-3 years, provided there are no regulatory issues coming forward in the F&O segment. So I think it's a very good company, can be considered for a long-term holding. But at around 2,000, 2,100 odd rupees, today it has run up quite a lot.
Okay, so that's the take on all of these names. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll come right back. Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And on to today's show, we have Kunal as well as Rajesh to guide you better. And Rajesh, coming to you for the next query. This one is from B. Sai Babu from Chennai. He's a long-term investor and wants to know a take on two counters, that is Gabriel India and HPL Power. Can he enter at current market price with 1 to 2 year investment horizon?
Yes, both are a buy from our side. In fact, in our auto segment, I have mentioned Gabriel, and we think that going forward with the kind of buzz in the auto sector, auto ancillary as a pack is going to do well, and Gabriel being one of them. One can go long on both of these. These companies are going to give good returns in a period of 12 to 18 months. Fundamentally, they are very sound.
All right. This one is coming in from Amit Sood, and he has two lots of ICICI Bank November futures, Kunal, at a price of around 942.68. He wants to know whether he should cut his losses and exit or roll over to December series.
See, I would say that you can hold on to the futures. In fact, roll it over to the December series. Yes, the stock has underperformed, but then I think many of the private sector banking stocks have been like this over the last few weeks. But then I think the case for ICICI Bank and many of the larger cap private sector banking names is that these stocks have gone through an extended period of consolidation. So sooner or later, these stocks are are more likely to get into a breakout as well as on a trending mode. So purely in that aspect, I would suggest a hold as well as a rollover.
Okay, the next query, Rajesh, is coming from Krish. He's holding 30 shares of Timken India from a price of 3,317 rupees. He's not happy with the performance and sitting at a loss in this one. Can he go ahead and make a shift to Polycap India at this point in time?
See, both are good companies. I would say Timken with low volumes and low volatility, I think it's underperforming the market at this point of time. If you have a medium to short term view, you can definitely switch to Polycab India because that company is doing very well. The numbers have been exciting. Their FMEG is doing very well. Cable and wire business has done well. I think Ion Polycap has a potential to move to 5,500, 5,600 in the next 6 months or so. So one can switch to that, but then again, I would like to reiterate that Timken is also a good company, but with less volatility and give very good returns in a very long period of time, maybe 2-3 years down the line, you will see Timken giving very good returns.
All right, this one is coming from Amit Mishra, writing to us from Bangalore. Kunal, this one is for you. He has 100 shares of Balrampur Chini, purchased at 436 rupees per share, 76 shares of Shankara Buildcon at a price of 822 rupees per share. For the short term, what should his strategy be for both of these counters?
For Balrampur Chini, I would suggest the hold. Looks attractive. In fact, the setup for the sugar stock as well as for the entire sugar names, I think it started to look very attractive from that kind of a time span. So looks attractive. Would suggest a hold. But for Shankara, on the other hand, it's a weak chart. The stock is come back towards a major support of 675. Currently, it's at 700, 712 levels. I would suggest keep a stop loss of 675 for Shankara. But for Balrampur Chini, you can continue to hold on.
Okay, Rajesh, the next query is from Satya. He's holding two pharma names. Firstly is Granules India. He's sitting at a 20% profit in this one and similar kind of gain in advanced enzymes. Good to book out profits in both of these. Any targets to look out for as well? And at this point, can he go ahead and enter IQ Lights? Is what his query is. So two parts. Firstly, take on both of these counters and your take on IQ Lighting.
See, I think one can book profit in advanced enzymes, and if somebody wants, one can re-enter at lower levels if it comes down to 300 odd levels. As far as granules is concerned, it's a buy from our side. One can buy at this point of time. As far as existing holders are concerned, one should continue to hold. IQ Lighting, I think one should avoid at this point.
Rajesh, this one is for you. This one is coming from Sunny. He's writing to us from Mumbai and he wants to know if he can buy Raymond currently at current market price. He's looking to hold this counter for the next 18 months. Leaving aside what the news flow is currently plaguing this particular counter, do you think that it makes sense to actually add this particular counter on dips for a period of about 18 months or so, given the fact of the businesses and the business outlook going ahead?
It's for me?
Yes, Rajesh, it's for you.
Yes, one can definitely buy Raymond. The stock has corrected quite a lot in the recent past because of all the negative news on the promoter's side. I would say their personal problems, but nothing has been gone wrong with the company. So the company is doing very well, and this kind of a negative news scenario, giving a cut in the price, is giving a good opportunity for long-term investors to accumulate the stock. With good brands, good numbers, I think going forward, this stock can give very good returns accumulated.
Okay, the next query that I have is from Punam from Punjab, and Kunal, she's holding Meghmani Organics, 500 shares, close to the current market price of 76 rupees. Your take on this one, because the stock is on the move today.
Well, yeah, I think it started to look attractive. It's showing signs of a breakout for itself. 70-75 had been a major resistance band of sorts for the stock price recently, but I think looking at the charts on the longer term basis, the recovery for the stock from 70 odd levels very recently, I would believe that the stock should have more legs. I would suggest a hold.
All right, I am very unsure, Kunal, if you track this one, or for the matter of fact, I don't even think Rajesh tracks this one. Sri Rama Multitech, Kunal?
No, not really.
Rajesh? I don't think so. You track it either. Okay, I'll skip that query. So, Gayatri, both of our experts do not track this particular counter. So, we'll skip this one. And the next one is coming in from Vishwanath Nair. He wants to know if it's good time to enter Idea Forge right now. However, he's asked Kunal to answer this query. I will take this one to you, Rajesh. Given the fact very limited chart history coming in for Idea Forge, wouldn't be correct for actually Kunal to comment on it. But Idea Forge, do you think it makes sense to go ahead and invest in this particular counter right now?
No, I think the valuations have been quite steep. After the listing, it has seen quite a good run-up. If some meaningful connection takes place in the stock, by meaningful I mean at least 20% from the current market price, then only it becomes a buy. At this point of time, it's a avoid.
All right, Kunal. So Vishwanath Nair has another one which I'll take to you. He has HL above 1,000. I purchased at 1,770 rupees per share. He wants to know, can he go ahead and exit? He has about 10 shares in this particular stock right now.
I think you should definitely look to hold on now. If my assumption is that you are a long-term investor, since you've managed to buy the stock at much lower prices and you're still sitting on great profits. Now HL, I think, has been a stock which has been like a leader for the entire defense sector. So I think even at current levels, the stock looks attractive. There could be a strong possibility that we may be looking at a zone where many of these defense stocks can get into a further multi-year uptrend for themselves. So have more patience and hold on to the stock from a long-term play.
Okay, moving on. And Rajesh, the next query is from Devashish from Kolkata. He has two queries. Firstly, he is holding Tata Teleservices, 2,000 shares at a price of 97 rupees, sitting at a loss in this one. But should he continue to hold on? And he also has Paytm from a price of 913 rupees. Can he go ahead and buy more at current market price for long-term wealth creation?
See, both the counters have poor numbers, I would say. One should not be invested at this point of time in both of them. If possible, I would say exit from both of them. Tata Tele, the numbers have been bad. It's been going up and down. Sometime upper circuit, sometime lower circuit. Nobody knows what's going on. It's better to exit Tata Tele. And as far as Paytm is concerned, that again has the same issues of poor numbers, bottom line still in red. Going forward to things look very dicey with the kind of competition coming up in the sector, no customer loyalty, and even last session we seen that Berkshire have sold their stake. So it's better to exit both of them.
Right. Kunal, this one is coming from you, from Rajash S. He's writing to us from Bangalore. He's saying that he's a senior citizen. He's age 63. He's holding 2,000 shares of SJVN, which he's purchased at a price of 29 rupees per share. He wants to know whether he should look to exit this particular counter. He's saying that he's a long-term investor, but he wants to know whether he can hold on to this one for the next 12 months for further gains.
I see no reason why you should look to exit. I think you've, first of all, congratulations because you've bought the stock at a phenomenally low price and specifically at a point when the stock did not have any major signs of, in technical terms, kind of a breakout. But then I think the stock has started to shape up quite well. At 80-83 levels, the stock is trying to surpass the previous resistance zone for itself, which I believe once cleared convincingly, the stock could rally up to at least 15 to 20% further from even those levels. So I would believe that you should continue to hold on to the stock price. It may take some time for the stock to get into that breakout or a stronger breakout zone, but I believe a possible 3-digit target also could be in the offing for the stock in that kind of a time span.
Okay, so that's the take on SJVN. But with this, viewers, it's time to slip into a very short break yet again. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries. This one is coming from Dilesh Joshi. He's a long-term investor. He's spoken about Adani Wilmar shares, and in fact, if we can hold it for the longer term, Dilesh, we just had a short while ago Rajesh talk about Adani Wilmar and the rest of the group, Adani Group counters. So maybe you can have a look at that one. The next one actually is coming in from your namesake, actually, Rajesh. This one is from Rajesh. He's writing to us from Punjab and he wants a query specifically taken to you, and it's on rate gain. He's saying that he has about 850 shares which he purchased at the price of 396 rupees per share. He wants to know whether he should continue to hold on to this particular counter despite the fall that it has actually witnessed of late.
See, despite the fact that it has fallen off late, I think the company is doing very well and we should continue to hold. The industry is doing very well and the numbers are going to reflect that in the longer term price. And maybe a target of 750, 780 would be a prudent target to book profits in this, which I think would be possible in the next 2 to 3 quarters. Continue to hold.
The next query, Kunal, is coming from Muni Raju from Chennai. He's a long-term investor and for the past 5 years, he's been holding 2 counters. Firstly is TTK Prestige, where he has bought the shares at a price of 520 rupees, sitting at a profits in this one. But the other counter is LIC Housing Finance, at a loss in this particular name because his buy price is 531. What's the take going ahead in both of these names, as well as should he rather make a switch from LIC Housing to any of the growth counters that you would like to suggest?
So you can make that switch. I think LIC Housing has gone through a major time-wise consolidation. The only reason I would suggest a switch would be to try and shift from this stock to a slight high beta name, or maybe if you're looking at it depends on the composition of your portfolio, but if you're looking at a larger cap name, you can recommend that as well. So the only reason I would suggest a shift would probably be the relative outperformance which you can get from the other space. So I would believe that if you look at a formidable stock from the mid cap name, L&T Finance could be something which you can consider even at current levels of 140 approximately. And from a larger cap names, I think Chola Finance or Shriram Finance is the other stock which I would suggest.
All right, this one is coming from RK Ahoja. This one is for you, Kunal. He has KEC International at a price of, I think, is 676 rupees per share. Linde India at a price of around 6,600, as well as Repco Home at 440 rupees per share. He wants to know, out of these three counters, which one should he look to exit from his portfolio? That's KEC, Linde India and Repco Home, because he's incurring about 15% loss in these counters over the last 2 months.
See, I think I would recommend all three of them. Now, I understand that you're losing out on all three of the counters because in the last 1 month, these stocks have gone through a mild corrective wave. But I think Repco Home, for example, the stock is taking resistance at the 390 mark. Linde India also, on the other hand, I think is going through a bit of a resistance from the previous top or previous double top of 6,500. What you can do for Linde India is maybe keep a stop loss of 5,600, 5,650. So if that's the band, the stock closes below those levels, you can exit. But the other two names is where I would think you should continue to hold on.
Okay, Rajesh, the next query is coming from Akshay from Bangalore. He's holding shares of SBI. He didn't share his buy price, but he wants to know that should he go ahead and book profits in SBI and rather make a switch to some of the private bank names like HDFC as well as ICICI, which has been, like HDFC specifically, has been underperforming the move. So what will be your advice? He's a long-term investor.
See, for long term, it's a difficult choice to make between HDFC and SBI. Both are doing very well. Both are highly undervalued. I think in the longer term, both will give very good returns. So I would say, why not stay put with SBI, and if you have some spare money, you can go ahead with HDFC Bank. Switching at this point of time doesn't make any sense because both of them are very fundamentally very strong, and both are a buy from our side. So hold for SBI and add HDFC if you have spare money.
Right, with that, actually, let's kickstart with taking your queries in rapid fire then. And this one is coming from Money. He is a long-term investor. He has 80 shares of HDFC Bank, holding for over 10 years now. Kunal, what does he wants to know any prospect of the stock actually going higher in near future?
Yeah, the prospect seems to be better and the risk reward also is much better. I would suggest a hold.
Kunal, Anuradha wants a short-term view on Tejas Network, holding 5,000 shares at a price of 885 rupees.
Would suggest a stop loss on the straight, maybe closer to 785 could be a stop loss.
All right, this one is another one, a short-term query coming in from Kusuma. Kunal, this one is for you. Persistent Coforge for the next 6 months. What sort of a target should she keep an eye out on? And also, should she look to buy right now?
No, I think buy on dips, maybe closer to 5% lower from current levels is where you should look to start buying.
Kunal, Arvind Reddy specifically wants your advice on Anant Raj, holding 200 shares at a price of 120 rupees. Good to book profits or continue to hold on?
If you're a long-term investor, continue to hold on.
All right, let's give a break to coming in for Kunal, and let me take the next one coming in for you. Rajesh, this one is coming from Kathir from Bangalore. Future prospects of Icici. 500 shares holding at 260 rupees per share. Can he add some more of this particular counter for the longer term? Icici, a recently listed counter.
Which company you said?
Icici, Kala Mandir.
Acha, no, I think one should book profit if somebody is sitting on a profit and exit.
Okay, Rajesh, what's your view on Titagarh Rail Wagon? Sudhir wants to know, is this a good buy with a 2 to 3 years investment horizon?
We have been positive on this counter from levels of less than 200, I would say. The numbers are still exciting. They have recently made tie-up with RK4J, ABB, and they have got new orders also. One can continue to hold, add around 900 orders.
All right, heartening to see somebody making profit in LIC. Kunal, next one for you. Srinu from Vijayawada has 500 shares of LIC, purchased at 660 rupees per share. Wants to know whether he should go ahead and book partial profits and hold on for next 6 months, or what's our strategy?
Continue to hold on.
Okay, Rajesh, what's your view on one of the recent listing, that is Protean Eager? Jonah Basu holding 60 shares at a price of 838 rupees.
If you're a long-term investor, continue to hold.
All right, and with that, we come to the end of the rapid fire as well as queries. Thank you so much, Kunal, as well as Rajesh, for joining us on the show, talking about the automakers and which one of the pack you prefer. But with that, viewers, we are totally out of time in this edition of Buy Now Sell Now. It's a goodbye from Srishti, myself, and the team that put the show together. Thank you for watching.